Welcome to FXpert Trading, where I use time cycles, median lines, and other technical analysis to identify trade setups in the US stock markets as well as the FX markets. If you like the information contained within this video, be sure to subscribe for more. Quick update for Apple. I closed the short I discussed in the last video as we approached this median line. I closed it for a 95% gain. I will look to re-enter this potentially next week with the expectation again that this blue cycle is going to be negative, looking for somewhere around the 270 area where these median lines intersect. This is the NVDA daily chart. I'm only showing this because I think this is going to be helpful in finding the top that we're looking for in the SPX. As you can see, I have a lot of median lines on here, but it's really only two different median lines on here. I'm going to zoom out for a moment, and you'll see that this first median line is from the December of 2018 low to the November 2021 high, followed by the October 2022 low. And that actually gives you this upper warning line here, this lower warning line, and this median line. We've broken out of that, and there is no good median line set to put on here to find the next potential area of resistance. So what you can do is you can clone it, which is exactly what I did, and then you can overlay the lower warning line of the cloned copy with the upper warning line of the original, and you can see, if we zoom back in over here, this is the median line. It's this median line, but it's double the range, and we did actually get an interaction here at this median line set. It stumbled for a bit before finally breaking out. And so I think we might find resistance at the upper warning line of the doubled range. Additionally, there's another median line on here from the October 2022 low to the August 2023 high and the October 2023 low. And I did the same exact thing because this median line set clearly worked, right? We went straight to it, stumbled along before selling off a bit, then finally blasting through. And now we've just doubled this range again. This median line set, I cloned it, overlaid the lower warning line with the upper warning line, and that gives us this median line set here, which is moving up towards that median line, towards that upper warning line, and we have earnings coming up on Wednesday. So this earnings event could potentially help us find the top in the SPX market, in the SPY. What I'm expecting is either on Wednesday we'll run up to this, earnings are after hours, and then perhaps we'll start to sell off on Thursday. Or perhaps after earnings, maybe we'll gap up and then start to sell off after we achieve this target area. I'm certainly not suggesting that you should short NVIDIA after we achieve this target area. It's incredibly strong. That would not be a wise thing to do at all, but it might signal some short-term sideways action or perhaps the correction, as the next blue cycle here also suggests a low incoming sometime in mid-March. That lines up perfectly with the expected trough in the overall markets, which is also around mid-March. So perhaps this peak will also help us find the peak for the SPX. Another way we can do that is by looking at the VIX. I discussed these trend lines in the last episode, and I'll be looking essentially for the same thing. I'll be looking for a retest of this trend line to help us identify the potential peak in the SPX prior to the sell-off that I expect going into mid-March. Let's take a look at the SPX chart now. In the last video, I had discussed some short entries that I put on over here for the expected mid-March trough, as well as going long, expecting the trough around Wednesday. It ultimately came on Tuesday, but I had mentioned that because of certain levels that I expected it to achieve, I entered a short-term long position anticipating a bounce. The bounce I figured might fill the gap. It has not only done that, but exceeded that. So I do think there is a chance, a pretty good chance at this point, that it's going to break to a new all-time high before we finally get this sell-off. Fortunately, the position that I opened here, which was a hedge for these, I closed for about 60%. So if these do not work out, which I will not really expect them to, should we break to an all-time high, as long as I can recover 40% of that position, this will overall be a wash. In the meantime, I will be looking for additional short entries. I had mentioned in the last video I would enter again at any retest of this upper warning line and or this sliding parallel. I have not actually entered into any additional short positions yet. And any of those short positions that I do enter into will have a longer expiration. They're not going to be short term like the bounce play that I had here. I've decided that I will wait until we achieve this sliding parallel up here before I enter any additional shorts. Any shorts that I do enter there will have a longer expiration, looking for the mid-March trough, and I will only enter a portion of a position. I haven't decided yet. I'll probably just put on half of a position here, and then I will wait for exactly what I mentioned in the prior video, which will be a break of the prior day's low. That's when I'll start to put on the shorts. I'm not going to be as aggressive considering the overall strength of the market. I'm going to go to the ES chart for a moment. This red line here is just yesterday's close. But if we break above this cycle high here, then I don't think either of these are necessarily going to be valid. I don't know if we're going to make it down to 4,800 anymore. It will probably start to look like 4,900 to 4,950, somewhere around there. And on the SPX chart, that level is going to be similar to slightly lower. And all of my strikes are right in this area. Because of the price at which I got them, which with an average price of, I believe it's 120 per contract, should we make it down here by the mid-March timeframe, those would be profitable. But ultimately at this point, what I think I'm going to do is reset additional shorts, perhaps up here. We'll go back to the other SPX chart for a moment. I'll put on perhaps half a position here and then wait for the candles to show the reversal. And I will look to exit the other shorts, most likely at a loss, hopefully just not a large loss, around the February 28th expected trough. And depending on how big that sell-off is into that expected trough, they may be break even. I doubt they'll be profitable, but hopefully they'll just be a small loss and or to the break even point. I discussed in the last video shorter term shorts. If we break to an all-time high here, it will depend on where in this cycle we start to take out the prior day's lows. That's going to determine whether or not I will put on shorter term shorts or only longer term shorts. If it's like either of these two cycles where it happens the day before the trough, I definitely will not be putting on any shorter term shorts. The reason for that is if we look at the prior cycle, it's better if I stay on the ES, I suppose, for this. The prior blue cycle, the second to last orange cycle, it did exactly what's been going on lately. It put in the trough. Actually, this is the same day as the peak. And this is the second to last orange cycle, which is what we are in now. It wasn't until the last cycle where we took out the prior day's low about midway through the cycle. If we can do that about midway through this cycle, then perhaps we'll get a correction like this during this cycle, and then it makes sense to also put on some shorter term shorts. But if it's something like this where it happens very late, it doesn't give you a lot of room to short successfully. So to recap, what are we looking for? We'll be watching earnings closely for NVDA to see if we can reach up here and get some type of rejection along with the VIX. We'll be looking for a retest of this trend line to help us identify the top in the market. And finally, we'll be looking for daily lows from the prior day to get taken out, similar to what you can see over here. When was the time to go short? In this cycle, higher daily low, higher daily low, higher daily low, higher daily low, higher daily low. Once we broke the prior day's low in this candle, that was the time to go short. That's what we'll be looking for here. That's what we'll be looking for in the following cycle, which under average time frames would be the final 2-week cycle in the larger 2-month cycle. And it's later in the 2-month cycle that you want to start putting on shorts. As always, thank you for watching this video, and be sure to subscribe for more.